Trying to put together a 4-day win streak. My next guest says FOMO and Tina will remain alive and well, keeping this market rally going from here. He has 3 stocks that will benefit from this. Joining me now is Dan Genter, the CEO and Chief Investment Officer at RNC Genter Capital Management. Dan, it's good to see you again. First of all, I don't think you're describing this rally in flattering terms. So when you say poised to benefit with these stocks, explain what you mean by that.
Well, I think what you're seeing, Kelly, is that this is just a market that people want to be in. I mean, they're afraid of missing out. They don't have a lot of alternatives, and they want to be in this market. And they're getting pickier, though, with what they want to have. They are a little concerned. You know, we saw that recently with the 3.5% pullback, you know, when we had a little speed bump in the road. And but they want to get back in. So I think what they're looking for is becoming more discerning. Things are starting to tilt a little more towards value. I think when you look at companies like Enbridge, I mean, it gives you, you know, it's the largest midstream energy company in the country, primarily focused on pipelines, but they're way ahead of the game with renewable energy. And the thing that I like about it is sitting at about a 15 PE, you get 6.9%, basically 7% while you wait. And and that's just a good place to ride this out as we probably go into this market advancing a little bit slower, you know, into 2022. Yeah,
no, energy investors are absolutely salivating over the cash flows that we might see, especially if they are, you know, hesitant on investment. I was going to say, usually when I see you, I think dividends immediately. So case of Enbridge, Gilead, Disney, are all of these for you primarily dividend plays? And why do you think they might be especially poised to benefit in this market environment?
Well, certainly Enbridge with almost 7% is going to be a dividend play. You know, with Gilead, you know, you've got 4.1%. There again, I think it's more of a fundamental play there than a dividend play. It's nice to have the dividend, but you're dealing with a company that's at about a 10 PE right now. It's really undervalued. It has a 75% market share, you know, that has an HIV. And I think the untold story is where they're growing in oncology. And I think so the stock really has an ability to leverage up again. Disney is actually not a dividend pay. They cut their dividend and eliminated it. I think there's a potential dividend play in the future because I think it's going to come back online just because they were down about 30% in revenues because of the pandemic. But they really took that as an opportunity to take lemons and make lemonade and dramatically increase their direct-to-consumer business, you know, which is now a $26 billion business and will be about a third of their revenue. So when parks and cruises and other things come back online, I mean, they really have a chance to expand dramatically. I mean, it's not cheap at 26 times, but probably coming down more to 22 as we go over the next 2 to 3 years.
But I am surprised to see that in your portfolio. You know, why is it that it, you know, since it's not paying a dividend, you like it? Is it because there's anticipation that dividend is coming back, or just you can't resist it when you think you see a bargain?
Well, I think it's both. I mean, clearly, you know, as I mentioned, I think that it's a 2 to 3 year play on Disney, and we just like the fact that now they've literally increased their revenue by about another third through the pandemic by taking advantage of this opportunity in direct-to-consumer. And I think the dividend will come back online. I mean, they've been a long-term dividend payer, and so as cash flow increases, they're expecting revenues to be up 40% next year. So as they get that cash flow coverage, I think they'll come back with the dividend, and the stock will clearly get a significant bump when they bring that and return that.
All right, Dan, thank you very much for your thoughts today. It's good to have you.